This is my time. I'm on the rise. Can't hold me down. I'm too fly.
If you've made it to episode 7, you're not just consuming ideas, you're building your own wealth operating system. In the last episode, we built your financial game board, the tool that shows you where your money comes from, what assets you own, how close you are to freedom, and what moves to make next. Today, we fill that board with power moves. If you want to stop trading time for money, you need leverage, not just more discipline. You're going to learn the 7 most common cash flow levers used by wealthy physicians. These are the exact playbooks we see every week inside the Doctor's Investor Club. You'll walk away knowing which levers match your time, your risk, and income goals. So let's dig in. Let's start with a mindset reset. Cash is what you have. Cash flow is what shows up again next month. Most doctors are great at generating cash, salaries, bonuses, overtime, but wealthy doctors prioritize cash flow. Here's why. Cash depletes. Cash flow regenerates. Cash buys stuff. Cash flow buys time. And here's the kicker. Wealthy physicians don't just accumulate assets. They build machines that spin off monthly income, whether they're operating or not. And here's the kicker. Wealthy physicians don't just accumulate assets. They build machines that spin off monthly income, whether they're working or not. That's how they create leverage. Let's walk through the 7 most reliable cash flow levers physicians can use and how you can start pulling 1 or 2 immediately. The 7 cash flow levers. Number 1, medical practice ownership or partial equity. The move, shift from producer to partner. Whether you're a founder, a partial owner, or joining a roll-up, you move from earning from labor to earning from profit and scale. Tip, do not go at it alone. Join a joint venture with younger doctors, operators, or private equity roll-ups for efficiency. Number 2, medical real estate. Own the building you operate in or co-invest in medical office syndications. Why does this work? Sticky tenants, long leases, recession-resilient income, depreciation benefits. This is often the first passive play for doctors who want predictability with tax shields. Number 3, non-medical real estate, being a passive partner or a co-GP, general partner. Think multifamily, self-storage, industrial, build to rent. You can invest passively in syndications, or you could act as a co-general partner if you bring capital or physician LPs. Cash flow, often quarterly. And the bonus of this is there's massive tax benefits through depreciation, cost segregation, and 1031 exchanges. Number 4, private lending or physician credit pools. You want predictable short-term cash flow? Be the bank. Fund bridge loans or short-term lending deals, often at 6 to 12 months, secured by real estate or assets. The returns often range from 8 to 14% annualized, and some physicians are now pooling capital into group lending funds. Number 5, cash flowing private businesses. You don't need to run them. You just need to own a slice. Examples of this, dental roll-ups, aesthetic chains, urgent cares, franchises, and niche service companies. Structure it right, and you can collect cash flow, get preferred returns, and share in the upside, as well as avoid operational headaches. This is how the family office model works. Number 6, digital assets or scalable side ventures. This one's for the physicians who have a niche, a network, or knowledge to share. For example, on this one, online courses, licensing deals, memberships, subscriptions, paid medical education. Even $5,000 a month in digital income equals owning a $1.5 million asset that produces 4%. The real flex here, you scale insight, not out. You get better terms, pools, and access bigger opportunities. Your network becomes your net cash flow. That's one of the primary missions of Doctor's Investor Club. We don't just give you access to deals. We connect you with smart doctors, smart things. So now that you've seen the 7 and overwhelmed, you only need to pull 1 to make progress. So ask yourself, what's your desired involvement? Do you want pure passive? And if you do, look at syndications or private lending. Do you want to engage 5 to 10 hours per month? If that's the case, look at business ownership or co-general partner deal roles. If you have scalable insight, explore digital or licensing models. Next, what's your monthly cash flow target? Set a short-term target. Say, I want $5,000 per month in non-clinical income within 12 months. Your goal determines your lever. Next, who do you need to partner with? Other physicians, general partners on deals, operators, medical groups. You don't need to go silo. You just need to go smart. Great book by Dan Sullivan is called Who, Not How. It's finding the right who's and not necessarily figuring out the how. Wealth is not built from income. It's built from what you do with the income you make. So here's your challenge. Action stick. So here's your challenge. Pick 2 of the 7 levers you're most curious about. Then do one small action to explore each. Examples: join a webinar on medical real estate. Ask for a deal deck from a business operator. Read a book on private lending. Or schedule a strategy call with me and our team. One lever pulled well is better than chasing all 7 poorly. In episode 8, the next episode, we're going to rewire your mindset with freedom through cash flow, not net worth. You'll learn why doctors with millions still feel trapped and how to fix that with the cash flow first framework. This is the Physician Wealth Framework series brought to you by Doctors Investor Club. Let's stop relying on earned income and start creating income that works while you sleep.
This is my time. I'm on the rise.